Today we explore the importance of ensuring that we take our wealth, our savings out of the banking system. This is the second video in a mini-series exploring anti-fiat currency options, including investing in gold, silver and Bitcoin. After all, there is a war against our wealth and we must act to win it. So let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy. So please do consider subscribing. Now, this excellent graphic from the Pew Research Center illustrates the gaps in wealth between upper income and middle and lower income families. So the chart on the left highlights how a median family wealth has fallen in 2016 to $115,200 from $144,600 in 2001. Meanwhile, for the lower tier, we can see that their wealth has fallen from $20,600 in 2001 to just $11,300 in 2016. In stark contrast, we can see that the share of the median family wealth has consistently risen from 1983 to 2001 and 2016 for the higher income group. The reality of these figures is highlighted on the right hand side, where we can see that there is an effective war taking place on the poor and middle classes. And this is true globally, not just in America. Of course, systems are designed to produce consistent and well-designed outcomes. Just as our central heating systems are designed to warm our homes at set hours of the day, the economic system has been designed to favour the wealthy to the detriment of poor and middle-class households. This chart from the US Federal Reserve's bank's data serves to highlight the system attaining its intended outcomes, which is to realise higher net worth for the top 1% in society. I and many others firmly believe that these trends are very much set to continue in the future as the system continues to work in the way in which it has been designed. Now, during this ongoing crisis, national debts have soared to extraordinary levels and are set to continue to rise without real action, which would need a revaluation of gold prices. As I've discussed in this video, the repayment of these debts must come through a process of financial repression. A similar approach was used following the enormous war debts that were accumulated after World War II. Financial repression involves the transfer of private sector wealth to the public sector. The process of financial repression will certainly hit the poor and the middle classes hardest. But it has previously seen large returns for holders of precious metals. And so what will financial repression involve? Firstly, it will involve dissuading people from saving through zero or even potentially negative nominal interest rate policies. Many of us have got used to this process over recent years, but this is set to go into overdrive, as we'll see shortly. Second, it will involve higher levels of taxation. This is likely to come through a variety of formats so as to lessen the blow and disguise the severity of the attack on our wealth that is underway. There is highly likely to be a green emphasis for this, where road taxes for petrol and diesel cars soar, but we are also likely to see some wealth taxes for those owning second homes, higher capital gains taxes, and more middle class workers being dragged into higher income tax thresholds. Again, these taxes are likely to go into overdrive, as we'll see in a moment. Third, it will involve the regressive hidden tax of inflation. Whether you look at inflation as the general rise in prices or alternatively the expansion in the supply of currency and credit, we are going to see a lot more of it in the future. Now central banks are moving towards a 5-year long-term average of inflation at 2%. Given that CPI inflation has been running below this level for some time, it gives them enormous room to boost inflation in coming years and argue that they were simply hitting their 2% average target. This regressive inflation tax will reduce the real size of the government's national debt and will actually reward debtors while penalising savers. And so now we come to the crucial reason why it makes perfect sense to take your money out of the banking system. And this comes down to the fact that we are on the cusp of the most incredible change to our currency and the way in which we bank. While bail-ins have seen people lose savings as the bank seize a percentage of deposits, I think this is far less risk of happening than it was when it took place previously in Cyprus, for instance. Moreover, the bank bailouts, which saw the taxpayers on the hook for bailing out private corporations back in the 2008 crisis, are far less likely to happen, as I discussed in this video. Why is this? Well, shortly central banks globally will begin to roll out their central bank digital currencies, or CBDCs. Previously, it has been the banking sector that has created around 97% of new currency, and this led to our claims for our bank deposits being upon our respective banks. But as we move towards a system of CBDCs, our claim is effectively upon the central bank itself. What's more is that the type of quantitative easing that has previously been used has failed to generate the desired inflationary output. What CBDCs will therefore allow is the morphing, the blurring of the lines between monetary policy and fiscal policy, that is government spending and taxation, where an economic stimulus, a universal basic income, can be targeted at deserving individuals. Such a stimulus may require it to be completely spent by the end of the month, and it's this type of global stimulus we can soon expect to see. This will help to ignite that inflationary spark, but this will not be the end of it. CBDCs enable central banks to determine who should be deserving of positive interest rates, perhaps the asset poor, and who should be deserving of negative interest rates, and literally incentivized to go and spend our currency as quickly as possible. Moreover, when it comes to doing a tax self-assessment, this will shortly be conducted for us and the currency simply taken from our bank account. What's more is that we continue to live in a world of deflationary pressures, whether it is due to the aging population, demographics in America, Western Europe, or in Asia, which sees the population consuming less year on year. Or whether it's the deflationary impetus of technology and how that increases efficiency and lowers average unit costs of production, or alternatively the deflationary stimulus that's created by globalization. To offset these deflationary pressures, central banks and governments are fighting a considerable battle which will require ever greater debasement of our currency by more and more digital currency creation. This is where some argue that there is every chance we may be entering an era of hyperstagflation. High inflation, low economic growth as zero interest rate policies enable the persistent existence of zombie firms. This is where some argue that there is every chance we may be entering an era of hyperstagflation. High inflation, low economic growth as zero interest rate policies enable the persistent existence of so-called zombie corporations, which may in turn crowd out or prevent new private sector innovations. In my eyes, this is why we are entering a new era for gold, silver and certain crypto assets such as Bitcoin. Do let me know what you think in the comments below. Thanks so much for watching. Do consider subscribing and I look forward to seeing you next time. Bye bye.